Okay, so Sunday night, we're about to start the new week. Tomorrow, when the markets are open, and we like to start with a top-down analysis of the Dow Jones, see where we are and what we can expect next week. So, on TradingView, if you go to commodities, trade ideas, indices, you can get the Dow Jones, you get some information. Sometimes good idea. Now, reading through the news is not what I do. You want to just skim over the headlines, right? What I'm looking to do is get a feeling for the market. What's it feeling like? So, a quick scan over these headlines sort of tells me what's going on. When was the news? Stocks edge higher. Wall Street pairs gains. U.S. stocks rally. Wall Street open higher. Futures fluctuate. Strong earnings. Equities pair losses. Stocks pair losses. UX stocks tumble. Straight to open. So if I read through these, right, I get a sort of idea. It's been going up. It's been going down. US stocks surge. Stock rally. Futures rise. Mixed Fed comments. Okay. So what I'm starting to put stocks push higher, stocks ends week sharply up. I'm starting to read that a lot of rallying and pushing up and extending gains, uh, edge higher. These are a lot of words that I'm seeing here. Okay, futures rally, stocks soar. So this is going back to November and the 9th. Then it starts to close down a bit. So the last week, stocks in the United States hit a 10-week high. You know, US equities gain as Americans head to the poll. So this is one thing that I like to do. Just have a wee quick scan over here. You don't need to go too far back, but last week or so to see what the mood the mood of the market is. Now another really useful tool is the Fear and Greed Index. Fear and Greed Index. This is a very popular and used tool which tells us what the state of the market's, what people are thinking. So as you can see, it goes from extreme greed, and then all the way down to extreme fear. It wasn't that long ago, it was only a few months ago. I remember, yeah, doing here, October, it was in extreme fear where we're getting sell offs. That's when Bitcoin got sold right off, remember? Or the stock market's tumbled. But then invariably it goes back up again. Now, what's interesting, I will show you this. So you can see that this year it fluctuates between extreme fear and extreme greed on this little chart here, up and down, up and down. This is called an oscillator. So you can see that we're quite near the top of extreme greed. Well, we're at greed, but not extreme greed yet. When we're in the phase of greed or extreme greed, we want to be buying the market. Okay, we don't want to be selling it. Well, selling it's our second thought. We could sell it, but we want to swim with the flow of the market. So while we're in the greedy phase where people are wanting to buy, that's where we're going. So this week we're looking to buy only the market. Okay. Of course, when it changes to fear or extreme fear, we'll be looking to sell the market. So how do we do that? What we'll do now, just pulling up my chart here, you can see that on the weekly, market's been moving up like we discussed. We've had this little pullback. This is probably the last phase of this move. Go up, like the head and shoulders, then we could get a reversal, and then whatever, But this is taking us well into next year. Equally, as you know, it could go like this and then break out and then leg up. So, of course, it could do either or has to do something, going either up or down eventually. So in the short term, I want to buy this market up into this area. So on the hour trigger time frame, if we come down to dailies, just quickly look at the daily, we can see that we were heading up to this area of interest, and I want to push up. I'm expecting it to, over the next few weeks, we're going to be buying up into this zone here. Okay, this will take us into December. So how we set our indicator up to just tell us when there is a buy opportunity. So we go to the indicator settings and scroll down to signal series, and then we change that to any long. Okay, so now it will only show us when we have any long opportunities on. Okay, so that's the first thing we're going to do. The first bit of action is we're only going to trade longs. Second piece of action is with our stop. Now, just like you were doing last week, I think, you were moving the stop, zeroing out the risk. So say this is an opportunity here. Let's see, the buy. It's quite simple. The buy opportunity happens, you get in there, put your stop here. What I want you to do is get that stop and minimize that risk. I think roughly stops are working out about 2,000, yes, 1,600 there. When I've looked through the data, the stops are coming in 2,000, roughly 2,000 thereabouts. So as soon as possible, as soon as this price moves up, we want to be half a that and then getting into the profit zone. Okay, now I should bring to your attention that the lines, these plateaus, if you like, these levels, this is the signal system actually working out where the distance levels are. Distance levels are. When the price goes up, that's the support level in this case. So the support levels as the price goes up. So we can move this, move this, move this. Get going up. We see it coming through here, put it under there. Price moves up again, up to here, and then we get the breakthrough. So this week, I want you to concentrate on moving. We're only going to be targeting longs. So when they come in, we might be getting decent sized ones. So I want to try and squeeze out as much as possible out of them. So remember to take your 1,000 points off the table. So let's have a look at the trading plan. So same as before, except you're going to enter on the buy signal only. Buy signal only, text box. And then you put your hard stop in on the stop level dot or line. As soon as the trade has moved 1,000 points, close out 50% of the position. Then move the stop to zero risk and then trail the stop as trade moves up or down using the stop line support levels. So like I said, that's you're going to start off like that. This is where we're most at risk when the trade is first open. This is the danger spot. This is what hurts the account. This is what hurts us. This thing here. We want to get rid of that as quickly as possible. If we can eliminate this, then we've no pain. So the more this goes down and get to that side, then we know, it's a good place to be. As you know, you've experienced this, haven't you? It's a nice feeling to have no risk. Good. So, unfortunately, we will get losers. see here, let's look at some losers. How can we get out of these quickly? So say this is coming down, you get a signal. You get a signal here. Well, yeah, this could go. You know, you would get in here. Stop would have been there. So how do I know that that's going to stop me out? Well, this one, as soon as this candle here closes with conviction through my stop, your stop would have been out anyway. So that's just a straight stop. You know, there's not much you could do there. Again, with this here, let's see what the difference is here. Why you would have got in there, Let's see what's the loss on that. 1,500 points. So not much you could do there either. Let's see what the loss here is. You would have got in about here. What's the loss? Here, 1,600 points. Yeah, so as I was working out, the stop is usually always, you know, under the 2,000 mark. Of course, we'll get our winners as well. And if we're going long and we think this market's going up, we should get nice big runs like this. You know, that's what I'm expecting. I'm expecting to get decent sized runs and money makers. Let's see, the ones that smash down hard like that through the stop, there's not much you can do to protect the account. Ones that go like this, that don't smash down right away, like this one, I would be, if that started, if I was in this trade, I would think, oh, that's looking good. Buy text, I would say you maybe would get in about there, maybe by the time you get to it, stops there. So, of course, you get in, you're about here, and then it starts to do this. Then I think, oh, wait a minute. Then you get this close. Now, you've got an opportunity at that point there to get out. Save in. Save 400 points, you know. So what I'm trying to say is if you see strong conviction candle like that coming through the stop line, boom, just get out. Just get out. That's too convincing for me. And you'll save, you know, you'll save the account 400 points. Like that wee bit there. You know, three of them added up, that's 1,200 points. That's another whole stop loss just about. So they getting out that fraction early is really important as well. So if you could pay attention to that this week, we're focusing on the stop losses, trying to move it into the zero risk zone, trying to move it into profit, minimizing the risk. If you see it coming back on you in any shape or form with conviction, hit that close button. Don't be shy to hit the close button. Because as we know, this market's likely to go up and we will get opportunities. So let's just keep an eye on it this week and we'll see how it goes.